when the US is planning to mint a $1 trillion coin that's being, of course, speculated about. The Japanese stock market is flying as those charged with monetary policy desperately try and introduce inflation that's into their system. And the world is trying to recover from a global financial crisis. One of the key focuses in the investment community at the moment is the role of gold in a portfolio. Now, with a number of new products being brought to the market, Finweek looks at just how investors can get into the gold market. That's without necessarily being exposed to local gold producers. So let's take a look at this. We've got Finweek journalist Garth Tennyson still with us in studio, and Simona Levitt joining us as well from Finweek. Alan Demby, Executive Chairman of the SA Gold Coin Exchange, joining us at the desk for the conversation. Alan, thanks so much for joining us. Garth, just very quickly, let's break down the fundamentals of why people who are still bullish on gold think it has further to run.
Well, just that I read something about a guy talking about peak gold. Ore bodies are becoming more and more marginal. It's becoming more and more expensive to mine gold. And at the end of the day, you're sitting with a large global population, and your average person in the street doesn't actually own any physical gold outside of China and India, perhaps. So long term, the supply and demand fundamentals catch up, and gold just continues to rally. That is the theory. There is the other side of the coin that says as the US economy recovers, the dollar strengthens, and because gold is priced in dollars, the gold price falls. However, gold, even though the US has pumped massive amounts of liquidity into the system in an attempt to devalue the dollar hasn't devalued. It's actually strengthened over the last 5 years marginally, and gold has continued to outperform. So
perhaps that argument really doesn't stand, but what about a low interest rate environment? Because when he's saying that low interest rates, low return on your money, so perhaps put your money into something that is more physical.
And also, the low interest rate environment is a symptom of the financial difficulty that the world is in. And I think as long as you have a capitalist system where the financial system is very, very creaky and people have got a lot of concern still, the demand for an alternative store of value will always be there. And gold has been that store of value for time immemorial.
Are you able to keep up with the demand? Is the demand there? I mean, what trends have you seen in demand when it comes to gold coins?
Well, absolutely. There's certainly an increased demand. I think the turning point was in probably 2007 when we had the blowout in the financial markets. And I think ever since then, more and more people are investing in gold. But of course, it's not just a one-off, it's an ongoing idea to purchase. In fact, many asset managers today are saying that gold should form part of your portfolio. So I think all told, more and more people are acknowledging that with the uncertainty in the financial markets, that you should be invested in gold. 10 years ago, gold as an asset class was off the table. Today, gold as an asset class is back on the table. So I think, as Garth said, there's so many people out there who don't own gold. If you can get every man, 1 ounce, every person in the world to own one gold coin, that could be a huge demand, and the price can go to, who knows, $5,000 or $10,000 an ounce. So I think with the uncertainty in the world, gold's position is firmly entrenched for the moment, especially with a low interest rate in America.
Uncertainty, yes, perhaps entrenched forever, but a recovery is certainly starting to show right now. We had, I think it was Chinese data coming through this morning, very encouraging when it comes to that economy. The US economy is doing well, and the kind of safety aspect of putting your money into gold is diminishing. So Simona, do you think from where you stand right now that gold has still got that kind of safe haven appeals it used to have?
I think what's so interesting about gold is that just the fact that there are so many drivers that we've mentioned around the table already. So exactly, we're saying part of the driver is from a safe haven asset perspective. I think part of that we will see falling away. Certainly if you look at what the Goldman analysts have been saying, they're actually forecasting for quite a strong quarter in the first quarter of this year, and then for gold to actually taper. The longer term forecasts for gold are actually to see the end of the bull run. There are still enough drivers, certainly for this year, to still see gold continuing to shine. We've still got the inflation story coming through. We've still got significant demand coming through from nations like China and India, even though we are going to actually see India imposing an import duty on gold. And I think we're certainly seeing very strong demand, not just in gold bullion, the physical side, but also in ETFs and ETNs. They're incredibly popular.
I just want to touch on why that is. I mean, and you did yourself when you spoke about the inflation side coming in. You talk about a recovery, absolutely, but one of the symptoms of a recovery is oil prices immediately rise. And when oil prices rise, the petrol price rises and that engenders inflation. One of the consequences of all the liquidity that's been pumped into the world, particularly in Western markets, is people worried about long-term inflation. Okay, you could argue that hasn't set in just yet, but food prices are certainly still at quite high and elevated levels. And the more inflation you have, the more people look for alternative stores of value. Gold always does well in inflation, in an inflationary environment.
So it's got the inflation hedge aspect to it, it's got the safe haven aspect to it. Just seems like it's got kind of everything running for it in a sense. Of course, it is being questioned right now. It certainly is being questioned by a lot of investment houses, and I have seen a few reports coming through. But what about, why would you buy a gold coin in South Africa as opposed to, for example, gold jewelry or a gold miner, a gold stock, or why would you buy a gold ETF? I mean, why a gold coin?
Well, I think the question of buying gold shares needn't be answered. I think there's so many issues at the moment. I don't think one should be looking at buying any gold mines or any platinum mines at the moment. So I think you'd really want to buy the physical. I think the beauty of gold coins is that you can have 100% control. And I think that's what is perhaps not fully stated. I think with the uncertainty in the last number of years, I think people want to have a physical hard asset. And I think that's the thing that is perhaps missed. And that's probably the reason why China and India are such strong gold buying countries. It's part of their psyche. It's understood by them that part of your wealth should be made up by gold.
And I think when we were talking off camera, you were explaining to me that there's actually a distinction in the type of people who are investing in gold coins. There you're looking more at the retail market. ETFs and ETNs lend themselves much more towards bigger institutional investors where they're needing a lot more gold when they're talking about their portfolios. What are you saying from the retail investor in terms of how are they storing gold? What are some of the issues around having gold coins?
Well, I suppose the main issue of gold coins is storage. But first prize is to have your own safe custody or safe deposit box. Failing that, you have a company like ourselves that will store the coins for the clients. And I suppose that addresses the ETF story. 10 years ago, there was zero money invested in gold exchange-traded funds. Today, it's about a $90 billion industry. So I think that also has supported. It has made institutional buying and selling of gold so much more easier. But at the end of the day, I think coins were made for the retail buyer, collector. And as I said offline as well, I've found that over the years, the collector who has a longer-term view will ultimately profit more than perhaps the investor who's only looking to make money.
And of course, you know, gold coins with, for example, the inauguration of Nelson Mandela back in 1994. I'm sure that type of gold coin has enormous value right now and will have into the future. So as a retail investor, do you advise seeking out those very rare coins and of course with famous faces, or just a normal gold coin?
Well, that's a good question. You know, from being in the business for a long time, I'd say that the average investor or the average person should put 10 or 15% of his money into gold, 2/3 of which would go into bullion, such as Kruger Rands, where you get the gold and the Rand hedge and all the other players that go along with it. And of course, you get a lot of liquidity. You know, with Kruger Rands, you can turn into cash instantaneously, and that's a very important point. Then you should put 1/3 of that into collectibles. So you might not be an expert, but slowly you'll build a collection, be it Mandela medallions, the inauguration coin, which in 1994 was issued for 4,400 Rand. Today they're worth about 40,000 Rand. So nobody knows, you know, it's like being a share picker. You don't really know which coin is going to really appreciate or be worth a lot more, but you buy one of this and one of that for your collection, for your children or your grandchildren. And surprisingly enough, over a period of time, having collected a lot of these items, you'll be pleasantly surprised and find that they are worth a considerable amount of money.
And I think for the average retail investor sitting at home that doesn't have a huge amount of money and maybe doesn't have a retirement portfolio with one of the major fund managers, the nice thing about gold is, as you said, it's a store of value, but it's also extremely liquid.
I think there's some interesting products that have been launched. So, for example, if you look at the Investec Gold ETN, that works quite nicely also for a retail investor, because what's built into that product is that it eliminates the currency risk. Whereas for new gold, you actually have to take a dual view. You have to have an idea of where you think gold is going as well as where you think the rand is going. This product strips it out, so you're really just having to make a play for what you think the gold price is doing. In addition to that, it's actually got a very low cost structure because you're only paying for that so-called quanto effect, which is in basis points, so it's really, really small.
Another issue, and of course this perhaps opening up a can of worms, but we'd like you to comment on it because there was the whole issue around the actual quantity of gold and the grade of gold going into gold coins from the South African Gold Exchange perspective. Can you verify that? Because CNBC Africa did a story on it, and of course it was, it was a very controversial issue in South Africa.
Well, I'm glad you asked me that question and didn't ask me if there's gold in Fort Knox. It really pertained to proof Krugerrands, and there were certain production issues, which sometimes happens in mints. I think they addressed it. I think it involved a couple of 100 coins. I think that the press did confuse the matter with proof Krugerrands and Krugerrands. The blanks are actually minted at the Rand refinery, so there is quality control. And I think there were certain issues, but as far as I know, it's all been resolved and impacted on a few coins. In fact, over the years, mints actually make mistakes when they make coins. And you sometimes find that those error coins are worth a hell of a lot more money than the actual coins themselves.